Hello traders, today is the 4th of April 2010 and I would like to do a video regarding the commodity channel index, the CCI indicator. Okay, I know that there is a big debate about this particular indicator, which is a very interesting indicator, but a lot of people do not understand this indicator very much, and some people believe that it got a special power, and some people think that it's better to use this indicator compared to the price itself. All sort of belief and conception regarding the CCI indicator. But I want to show you something very interesting about this indicator. I don't use it very much. Sometimes I look at it, but I want to show you something very interesting. Here on this chart, I have the CCIs of a period 14, 1, 4, 14, okay? This is CCI period 14, 1, 4, okay? And on top of it, I have here a Bollinger Band. Pay attention. A simple Bollinger Band, yeah, 14.2, okay? Bollinger Band of moving average, exponential moving average 14, deviation 2. I put it different way to you. A Bollinger Band of moving exponential moving average 14 with volatility 2. Okay, that's it. Now, what I find out after observing this indicator, because I was a bit fascinated about this indicator at the beginning as a new trader. So I go a little bit deeply into it to find out exactly what this indicator is telling us, okay? Because there is a kind of a leading pattern it displays sometimes. But I find out something very interesting. One night I was on the computer, mostly after losing the whole day. I decided to watch the screen, and suddenly it came out of nowhere to my face, bam, like this. And I discovered that this indicator, in fact, CCI indicator, is a Bollinger Band plotted on this. Okay, it's just a Bollinger Band. If you see a CCI next time, just think of it as a Bollinger Band. Okay, the price and the Bollinger Band. Okay, the CCI, it represents the price itself. That's why some people say that it's the price, like the price, but the price is different than the CCI. But the CCI, it managed to repeat the pattern of the price better than the MACD. Okay, they are all repeaters of the price. They try to repeat what the price is doing. Exactly the same thing the CCI is trying to do, and is doing a better job than the MACD to repeat the price. But my favorite indicator is MACD, and I prefer MACD compared to the CCI. Okay, now, but that's not the point. As you can see here, I said to you that the CCI is representing the price, and those lines of the CCI, which is 100 level here, and below minus 100 here. The middle line is the 0 line, the yellow line here is the 100 level, and the bottom one is minus 100, okay? But if you see, the 100 level is the upper band of the Bollinger Band, and these low levels here, minus 100, is the lower band. So I put here, this is a CCI 14, and I put here Bollinger Band 14 also. As you can see, Bollinger Band 14.2, okay? 14 deviation 2 here, right here, okay? So you see the CCI here, it come on top of the band here, what the price also doing, exactly the same time, the price also is at band. So when the CCI is above its 0 line, what do you see? If you are using CCI 14 and the CCI 14 is above its 0 line, it means that the price is above the moving average 14. You can see here, right here, right here, right here, right here. So when the CCI 14 is below its 0 line, it means that the price is below the exponential moving average 14 right here. Can you see? Right here, right now. Okay? And when the CCI goes below its band, its minus 100 line, it means that the price is below the Bollinger Band. If you are using CCI 14, so it means that the price is below the Bollinger Band 14, the lower band of the Bollinger Band 14, right here, right here, right here, right here. So that's all. That's all about CCI. It's just Bollinger Band, okay? As you can see here, the price came out of the band here. It went below it minus 100 level, okay? The price came above the Bollinger Band 14. The CCI 14 also went above the Bollinger Band 14's upper band, okay? CCI 14 above it 100 line levels. It means that the price is above the upper band of the Bollinger Band 14. So if you are using a Bollinger Band of period 20, all you have is in fact a Bollinger Band of exponential moving average 20 deviation 2. So you see, when you know that, you don't need the CCI anymore. All you need is the Bollinger Band you need. So I see a lot of people, they put the Bollinger Band and then they put CCI and then they put other things. You don't need the CCI. The CCI is just the Bollinger Band, okay? And the CCI try to repeat the price. If it try to repeat the price, why don't you follow the price itself? Do you need an interpreter for the price? You want the price itself. Don't use the derivative, use the price itself. Because the Bollinger Band is good. Sometimes it will show some patterns that are not clearly visible from the chart. But I think the price itself is doing a very good job, you see. So now you know what is the Bollinger Band, and what it's doing is in fact a Bollinger Band, the price within a Bollinger Band, okay? So here, as you see, the CCI crossed the zero line here, okay? It crosses the zero line here, and the price also crossed the exponential moving average 14, because this is a CCI 14 also. So if you plot CCI 50 on your chart, then you have to know that what you are looking at, you are comparing the price to the Bollinger Band 50, because I use Bollinger Band 50 deviation 2. If I don't want to use that, I will place instead a CCI of period 50. I know some people use a Bollinger Band of period 30. If they don't want to use that Bollinger Band, they can use instead a CCI of a period 30. And the majority of people use Bollinger Band of period 20. If they don't want to use that, they can use instead a CCI of, sorry about these things, you can use instead the CCI of a period 20. So that's all you need to know about the commodity channel index, okay? Sometimes you will display some pattern, okay? Or sometimes, what I like about this, sometimes the CCI will come above its 100 level and then go below it when the price is still at band, okay? So if it happens like this, like it's happening here, all you need to do is to draw the trend line on the price itself. If the price break the trend line, you sell. Then you know that this one is leading, breaking this 100 level before the price is breaking the trend line. But why do you need somebody to tell you advance? Wait for the price to do it first, okay? So this is how the professional are using the commodity channel in this, okay? So now you know something that the professionals who are using every day, and they understand it clearly what they are looking at, okay? So it's just two bands, okay, representing the Bollinger Band deviation 2. So when you are above, that's why they say the trend will begin when it comes on top of the 100 level. So you just watch it here, okay? It reaches here, okay? And because the upper band of the Bollinger Band is supposed to be a resistance level, if that resistance level, which is the upper bound of the Bollinger Band, is broken, yeah, that level is broken, you know, the uptrend continues, which is right here. It's broken, this resistance here, broken here, retested by this level here, and the price just zoom up. So what do you need the CCI for to tell you again? It's just right there in front of you. That's what I'm saying to you. In the past, people were using the price itself, and then the mathematics come in, the computer came in, and they give us a lot of different indicators to use, okay? but the number one indicator is the price, and then follow the volume. Okay, until next time, enjoy yourself and be happy. Thank you.